Welcome back, traders. Today we continue our structure series, but this time, we are stepping into the level where most traders get stuck. In this video, you will finally understand exactly when a change of character, choch, or a break of structure, BOS, actually happens. We are going to break it down, slowly, clearly, and with real chart examples as well. By the end of this video, you will be able to look at any chart, any time frame with confidence. So, stay with me till the end, because after watching this video, you won't need to search for structure explanations again. Next, the market pushes up and creates this high. After forming that high, the market retraces back. Now remember from the previous parts of this series, a retracement is only meaningful when it is valid. That means, at least one pullback candle closes beyond the low of the last bullish candle. In this case, the retracement is valid, so this point becomes our confirmed high. After that, the market continues upward, and as soon as this high gets broken by a bullish candle body close, this low becomes confirmed, and we call it a higher low. Here again, the market continued and created a higher high and a higher low. Now let's focus here. The market pushed up to this high, and afterwards, during the retracement, it moved sideways, basically a range. But because the retracement stayed valid, this higher high is confirmed. Inside this sideways movement, the market created many small swings, or you can say, smaller structure points. Remember, this entire range is just internal structure, as long as it stays between this confirmed higher high and this higher low. Therefore, ignore all these smaller structure points. They are internal, and they do not change the main trend. After that, the market continues upward and breaks this higher high. Now, after this breakout, look for the lowest price point inside this range, this point right there. Mark this as the confirmed higher low after the breakout. Because the rest of the points are not the lowest of all inside this range, we always choose the lowest point of the entire internal range. Even if it is a wick, that will be the lowest point because price went up to there. Therefore, that becomes our confirmed higher low after the breakout. Now let's assume market went up to this high in this bullish wave and then started reversing. But here, the most important point is that you must be able to identify the last or the latest confirmed higher low in this bullish wave, because that specific higher low will act as a key structure point when the market starts reversing. So, we simply mark this last higher low. Draw a clean horizontal line on the lowest point of the wave. Afterwards, start observing the market in this new bearish leg. If the market breaks this last confirmed higher low with a bearish candle body close, not just a wick, but a body close, only then, we mark this level as change of character. Some people also call it momentum shift, MS. Use whichever term you like, both are perfectly fine. This is the first signal that the market might be shifting from bullish to bearish structure. Remember, yes, momentum shift, or change of character, is the first bearish signal. But keep in mind this very clearly. After this MS, the market is still not fully bearish. Many times it happens that after the momentum shift, the market continues in its main direction. It can still push higher. It can still continue the original trend. So MS alone does not confirm a full reversal. After the momentum shift, the next step, the next confirmation, is the break of structure, BOS. This BOS is what tells us the market is now actually shifting direction. The BOS is the confirmation after momentum shift, which is premature early signal. So first we get MS, then we wait, then we look for BOS. Only after BOS, we say the structure has truly changed. Let's simplify it from bullish to bearish in this example. Before we dive into a complex chart, first understand the main concept on this simple line chart. Here, it was a bullish wave moving up, and here is a bearish leg moving down. Right. So follow upcoming steps and keep them in order. Step number 1. Find the last confirmed higher low in the bullish wave. It must be the last one, the final higher low. Afterwards, price made this high and started reversing. Mark that low clearly with a horizontal line. This is your reference point. Step number 2. Watch the bearish leg after the high point. Observe when the market breaks that last higher low with a bearish candle body close, not just a wick. As soon as that body close happens below that horizontal line, mark this as momentum shift or change of character. Think of MS as the first bearish warning, but it is just an early signal, and it can be fake as well. How to identify fake breakout? This we will study later. Step number 3. After MS, wait for a valid retracement back towards the buy side. This retracement is a pullback into buy side. Mark this structure point as confirmed low in this bearish leg. Step number 4. Market continues in the bearish direction, and then it breaks that confirmed low from step 3. When price breaks that low, with a clear body close, you mark this as break of structure, BOS. BOS is the confirmation that the market intends to move in bearish direction. Have you noticed the difference between MS and BOS? For momentum shift, price broke down the last higher low from the bullish leg. For BOS, we look inside the bearish leg, but only after momentum shift. Hope your eyes are trained with the line chart. Now observe this picture on your screen. How market moved. How bullish wave shifted. How momentum changed and BOS confirmed the new direction. In the upcoming video, we will dive deeper into complex chart examples, as well as from bearish to bullish structure. We really work hard to make this content simple and valuable for you, so please like the video and subscribe to our channel. It truly helps us and keeps us motivated to create more lessons like this.